Over the last year, futures trading has become very popular amongst retail traders. Being able to easily access a funded account has increased the amount of traders trading the futures market. So in today's video, I'm going to be explaining everything you need to know about futures before you even begin. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. First, what is futures trading? According to Schwab.com, futures are a type of derivative contract agreement to buy or sell a specific commodity, asset, or security at a set future date for a set price. So pretty much what people are doing is trading based off of their future expectations of price. Now in the futures market, you can trade so many different things. You could trade corn futures, gold futures, oil futures, soybean futures, cattle futures, even the S&P and NASDAQ futures, which is mainly what we are going to be focusing on in this video. The only difference between options and futures is if that futures contract is executed, you are obligated to buy the underlying asset. So if you're trading oil futures, I highly suggest you do not let it exercise unless you want, I think it's 1,000 barrels of oil showing up at your front door. Now, the main way that retail traders are using futures is by trading the S&P 500 futures, also known as ES, as well as the NASDAQ 100 futures known as NQ. The S&P 500 futures moves in sync with the S&P 500, which is going to be SPY. I'm sure a lot of you trade SPY options. So if you're trading SPY, it moves the exact same as the S&P 500 futures. The same thing with the NASDAQ, that is going to be QQQ. They both move in sync if you trade QQQ options. Also, the NASDAQ is moving the same exact way as QQQ. But here is where futures and the options are completely different. When you're trading SPY or QQQ, you're buying a strike price, you're buying a call or a put, and you're making what the delta is for every dollar. If there's a 0.40 delta, if SPY were to go in your favor by $1, you're going to make $40 on your contract. So you have to buy into the contract, let's just say for $100. If it goes in your favor by $1 and your delta is 0.4, you're going to make $40. If your delta is 0.32, you're going to make $32 for that $1 move. Same thing with QQQ. You're buying calls or puts, you're buying a certain strike price, you're paying to enter the trade, and then you're going to be making whatever the delta is. Plus, on top of that, when you're trading SPY or QQQ, you have other Greeks that you need to keep in mind. Theta, Vega, implied volatility, which is going to be big when it comes to the Vega, and also your Gamma. But here's where futures trading is different. In futures, it moves based off of a point system. The S&P 500 futures, for every 1 point that price goes in your favor, you're going to make $50. If it goes against you by 1 point, you're going to lose $50. And another thing is, in futures, you're only going long or short the underlying asset. You're not buying options. So if you were to go long at 4,500 and price went in your favor by 2 points going up to 4,502, you are going to profit $100. Now, if you went long at 4,500 and price dropped down to 4,498, you are going to lose $100. Again, you are going to make or lose $50 per point in the S&P 500 futures. However, if you don't like that $50 per point, you can actually go and trade the micros, which is going to be $5 per point. So if you were to go long at 4,500 on the micros and price went up to 4,505, you are going to make $25. Again, 1 point is going to equate to $5 profit or loss. If you went long at 4,500 and it dropped down to 4,495, you are going to lose $25. So again, if you are not comfortable with that $50 per point, I definitely suggest you start off by trading the micros, which is going to be $5 per point. Now, as far as the NASDAQ futures, first off, if you trade NASDAQ futures, you are absolutely ridiculous. You might be a little bit insane because NASDAQ moves very, very quick. It definitely gives me like Tesla 2021 vibes. But with the NASDAQ futures, you are going to make or lose $20 per point. And for the NASDAQ to move 20, 30, 40 points, it's very easy for it to do. So you can see where trading the NASDAQ futures is going to be a little more volatile. But if you were to go long at, let's just say 15,000 on the NASDAQ futures and price made a move to 15,020 fairly quickly, because again, the NASDAQ can do that, you are going to profit $400. That is 20 points times 20, which is going to equate to $400. 500. Again, $20 per point. Now, if you were to go long at 15,000 and it drops down to 14,980, which is going to be minus 20 points, which again is pretty easy for the NASDAQ to do, you are going to lose $400 as well. Now, if you don't like trading the NASDAQ futures and you don't like the $20 per point, again, because it's very volatile, it moves very quick, you can trade the micros for the NASDAQ, which is going to be MNQ. That is going to be $2 per point. So if you go long at 15,000 and price goes up to 15,010, you're going to make $20. And if you were to go long at 15,000 and price drop down to 14,990, you are going to lose $20. Again, $2 for every point. Now, there are also tax advantages to trading futures instead of options. I'm not going to go over too much of that in this video. If you do want more information on that, just go on to Google, type it in, it's going to pop right up. But now the other thing is, when it comes to futures, the market is open 23 hours a day. They close at 5 p.m. Eastern time and open at 6 p.m. Eastern time. So if you're somebody who works a full-time job, let's just say a 9 to 5 on the Eastern time zone, you could wake up early around 6 a.m. Eastern time and you have a couple hours that you could trade, make your money, and then call it a day and go work your full-time job. Or if you have to wake up super early and go to work, and let's just say you get off earlier in the day, 2, 3, 4 o'clock, you can come home and you still have a couple hours that you could trade the futures. Now, on the flip side, if you're trading options, SPY, QQQ, Tesla, Apple, whatever it may be, the market is only open from 9:30 to 4 o'clock. If you can't trade during that time, then you're not going to be able to trade. And that's one reason why a lot of people started moving to futures, is because they work a full-time job and they can't be here from 9:30 to 4 o'clock. So if you do work a full-time job, you can look into futures, again, because it's open 23 hours a day, open Sunday night at 6 p.m. Eastern time. Next day at Monday, closes at 5 p.m., opens back up at 6, goes all the way until Friday, again, every day closing at 5, opening back up at 6, and then closes Friday at 5 p.m. Eastern time, and then come Sunday, opens again at 6 p.m. Eastern time. So when it comes to deciding if you're going to trade options or if you're going to trade futures, it really just depends on your situation. Again, going back to the job example, if you can't be here from 9:30 to 4, then look into futures. I personally think futures is a lot easier based off of the point system. However, me personally, options is just my bread and butter. That's what I do full time. I will take futures trades every now and then, but options is always going to be my main. Futures are going to be the side. But yeah, it really depends on your scenario. So sit down, ask yourself which one makes more sense for you to trade. And if you do decide to go the funded account route, which I personally do not suggest, I trade with my own money on ThinkorSwim when it comes to futures. To me personally, the whole funded account thing, it's very, very sketchy and I don't understand it. So because I don't understand it, obviously I'm not going to partake in it. But if you are going to do the funded account route, I highly suggest doing your research before you open an account with a prop firm, especially given the news that we had a few weeks ago about a prop firm that scammed a lot of its customers. So I highly suggest doing your research before you ever start trading with one of those prop firms or funded accounts. But that is going to wrap up this video on futures. So as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And make sure to check out some of the 800 plus free videos I have on my channel right now. Everybody have an amazing rest of your day, and I'll see you guys in the next video.